What's going on, traders? Yes, I've got a little bang in me, so I'm gonna bang this day out. Let's get it going. Let's get it going, guys. You know where you're at? The one and only Money Mitch. It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch. What's going on, traders? How we doing? How did you enjoy your trading week? Let me know. Did it end green? Did it end red? Regardless, we end on happy hour. Yes, here at 4 o'clock Eastern. We're going to go ahead and have some fun today. Talk about the stories of the week. And boy, did we have some stories like we always do. We're going to get into everything from Robinhood to Amazon to a little bit of, who knows, maybe a little fraud action. So stick around, guys. It's going to be a great show. Smash the like button. Let's go ahead and bring on my man, Ryan Rosviani.
What is going on, Zinger Nation? What is going on, Money Mitch? What a week, man. What a week.
What a week indeed, my friend. Just enjoying it. At the end of the day, there's always stories to talk about in the market. And on Friday, I like to kick back a little bit and give some more opinion because, I mean, a lot of the times, we want to stick on our informational side. But I think on the weekends is when it's perfect to go ahead and kind of have those conversations about the market, right? And so that's exactly what we're going to do right now. If you guys want to give opinions, definitely drop them in the chat. That's what this show is about. That's what happy hour is. Don't feel the need to hold back. I'm not going to hold back, so neither should you guys out there. All right, Ryan, let's get into the first topic of the day, which is, of course, I don't think I've ever seen anybody or heard anybody want to get an IPO more than they wanted Robinhood yesterday. But I certainly was not one of those trying to jump into the Robinhood IPO. I was kind of just looking at it. I even opened up the Robinhood app just to see how much they were trying to charge people for it. And it looked like they were at least trying to get people right at where it opened. But I mean, there's a lot of positives and negatives that come with Robinhood. I personally think that for beginner investors, especially out there, I think it's kind of a negative. I know that it is very easy to use. I'm going to talk about some features, and I'll let Ryan go into some of the things how he feels about Robinhood. But definitely, there's some features that I definitely don't like. I'll get into them after Ryan go ahead and gives us. What do you think, man? What do you think about the Robinhood IPO?
Okay, so I fixed my lighting now. Sorry about that.
Boom, so we can see you.
Yeah, sorry about that. I'm just happy that they just got kind of karma'd. They got really karma'd really hard, which was interesting. They IPO'd because I think they need money. I haven't seen anyone as desperate as them to IPO that hard in the middle of everything going on. They did like a private IPO thing that they wanted like no one to see their S1, and then the S1 came out, and we saw that their warrant structure was disgusting. And it's kind of preventing them from becoming like EPS positive. So I was shocked. And I saw it. I made a video on my YouTube channel. I said, hey, look, I wouldn't buy the IPO. I'd wait for Q2 earnings. I'd wait for Q3 earnings. And I'd play puts on this thing because I know options aren't available yet for it. But I was like, this thing isn't going to open strong because of that warrants. Those warrants mean future dilution. Those warrants mean that the balance sheet's going to have issues every single time they report. And it was really hot Q1 for them. And those numbers were great for Q1 because Doge was going wild. AMC was going wild. The GME was going wild. Doge literally made up 6% of their revenue. So now all that hype is gone. People move to Coinbase and Gemini to do it. They don't trust Robinhood. So I think it's I'm not surprised that their IPO open price is now their resistance point at $38. So it's interesting to see what happened.
So, all right. So, I mean, I think you're 100% on it. How do they actually make money, right? I mean, a lot of people wonder. I mean, it's a free platform, right? I don't have to pay a single cent to download the platform. I don't even have to pay for live data. I mean, normally you'd have to pay for live data,
you do.
Right?
You do pay for live data. Yeah, you have to have Robinhood Gold. You pay $5 a month,
That's how
and then
you
they
get.
give you Robinhood Gold.
That's how. So without Robinhood Gold, you don't have live data.
No, you don't. You don't have live data.
Man, that's it. I think that's kind of even worse, right? I mean,
Yeah.
but their gold isn't too expensive, right? I think
No,
they
it's just
charge you
$5 a month. It's $5 a month, and they give you up to 5K instant transfers, and they give you the level 2 live data and all that stuff.
Perfect. Well, let me get into at least the features that I don't like in Robinhood and why I am against trying to invest in this stock. Reason why I think in the long run, this stock is going to get hit hard by regulators. I think in the long run, there's going to be a massive, massive court trial on this. I think it's going to change the way that we look at investing as a whole, whether that be order execution, and we kind of figure that out on that end. But another thing is, I just don't like when brokerages kind of lead emotions in retail traders. And I think this is really what Robinhood does best, is create emotion. And I'm going to show you why, guys, at least the reasons why I feel. All right. So one of the first things that I really don't like that happens in Robinhood, and I'm going to go to an article here from The Verge. So The Verge, not on your opinion here, but I just don't like this right here, the confetti action when you buy or sell a stock.
Mitch, can you zoom in a little bit on that article? It's there's a lot of white space.
Got you. I'll zoom in. So
perfect. There we go. My old man eyes can now see everything.
I can't blame you, man. So one of the things that happens a lot is when you buy and sell on Robinhood, you see confetti. Even when you lose, you see confetti. Even like if you sell like a massive loss, you get like this confetti just flying around. And my thing is, what does that do positive? I don't think anybody can give me anything. I mean, we could go silent on that end. But what it does negatively is it creates emotion for the trader that just sold their trade. Whether it be a positive or a negative, we shouldn't be trying to affect traders in an emotional way. It should just be, this is your sell, this is your average price, and that's it. It shouldn't even tell you if you won or lost. And so to me, in when you throw confetti, what does that give you? That gives you that emotional feeling. And even let's say if you lost big and then you're getting confetti thrown at you, what does that make you feel like? I mean, Ryan, what would you feel like you got confetti thrown at you when you had a loss?
It wouldn't feel great. I'll be honest with you. Their gamification aspect from a marketing standpoint is brilliant because it gets you to throw money at it. And that's how these guys make money. It's every time you make a transaction. That's how Robinhood makes money. They sell order flow. That's how they do it. And they want to gamify it. They want you to keep coming back. It's a huge casino. That's why they front you the money when it first comes in. TD doesn't do that unless you're on margin. Webull doesn't do that. Other brokerages, I've never used E-Trade. I can't speak on E-Trade, but I know TD and Webull, they don't do that. You have to wait 2 to 3 days for the money to come in. So Robinhood, you do it, they front you the money. If you have Robinhood Gold, they front you up to $5,000. I think with my account, it's at the point where they're fronting me $15,000 if I just deposit anything, and they'll front me the first $15,000, which is wild. So it's very, very interesting how they play it out. And look, they're a company. They need to make money. That's how it is. Now, is it a great place for new investors? No, but it is a better alternative to apps like Acorns, in my opinion, where where they're not charging you anything, and you can come in, you can buy your SPY, you can buy your VTI or VOO, and just let it sit there and accrue kind of building up as those indexes move up and down. So compared to Acorns, it's great. Compared to Webull, not so great.
Yeah, I mean, I'll go into the second feature that I don't like here. And so there's not only that one, the confetti, right? So there's the next one that I would pay attention to, which would be this right here, guys. So when you look at their charting, a lot of the times they'd use this line graph, right? And the move can be very small and look massive on the way that they scale their charts. So if you don't use charting services, let's say other than Robinhood, and you just went strictly off this chart, sometimes I see this thing go straight up to the moon and the stock probably went like 10 cents up. And so to me, I don't like this scaling of the charts where you make moves look bigger than what they really are. What do you think about this?
Mitch, I agree with you. I think that's also another psychological aspect that they're using to gamify the app, where it's like it always looks like you're winning even when you're losing. That's the very interesting thing about it. It's kind of like a logarithmic scale rather than 100% scale. So you feel like, oh my gosh, Amazon's up like a ton. In reality, you're only up like $3 on Amazon, which is like a fraction of a percent. So it's all gamification. And look, from a capitalist entrepreneur standpoint, brilliant. You guys beat the game. You guys did it. But from a trader standpoint, from someone who's seen people get burned, and unfortunately, people have taken their own lives playing the Robinhood game and these dangerous games that you can play with options that they shouldn't be giving you investors access to because you can lie on those applications. It's very bad, and it's very, very bad, and they have a lot of room for improvement. And that's where it gets dangerous for the stock, is because I still think that these guys have been only around for 6 years. They're still a very new company in this space. They shouldn't be IPOing. And I'll say that parallel same thing for Webull, who also wants to IPO. I don't think they should IPO either.
Definitely. I would have to agree. You know, one thing is, I think, you know, these platforms to going into the public is just going to run them into more scrutiny. At least that's what I feel. But definitely, those are the two features right off the bat that I can say, as honest as I can be, not a fan of. Don't think they help traders, and all they do is create emotions. And if you're going to create emotions, I mean, we already know trading creates emotions enough, right? Mm-hmm. I don't think we need more emotions tied into a platform, let alone into my trading. So, hey, to each his own. If you want to go ahead and use Robinhood, I have used Robinhood, so I'm not going to be and act like a hypocrite here. I've used it, and the reason I used it at that time was for the free margin. You know, $1,000 in free margin for some people, you know, can help. You know, it depends on what kind of trader you are and if you use that margin consistently. But definitely, you know, I thought that was a beneficial feature. So I will mention a good feature that they have. But to me personally, I think you got to be careful, especially if you're a new trader and you do not understand how this really works, and also how Robinhood is like you said, gamifying the market here and their platform, and it can catch you. It can very much catch you. You know, the scaling of the charts, when you see those pullbacks on those Robinhood charts, I don't know about anybody, but if you see a chart go up to the top of the screen and come down halfway, I don't know who wouldn't have some emotions.
No, I completely agree with you there. I have to say the same thing. I used Robinhood because I couldn't afford to trade on platforms that were charging fees. When I first started trading, I was literally making $9 an hour as an intern. So that's like every hour I would work, I'd have to, if I wanted to put in a trade, I'd lose that much, and I couldn't. And Robinhood, credit to them, they changed the world of investing with that and stock trading with that, because they brought free commissions and everyone else adopted it. So I do have to give Vlad and the team at Robinhood credit for that, because that's a very positive thing. It unlocked a lot of doors for people around the world. It's kind of the equivalent of what DeFi wants to do with banking. So I give them credit there. I also like them for options trading. If you know how to trade options, if you have a chart on the side and you can do it, the liquidity on Robinhood is insanely faster than Webull. I tested it for 2 weeks straight, doing the same contracts on both apps. Robinhood is faster. So that's why sometimes I put a lot of my options trades through Robinhood. I have the Webull chart here, the Webull chart here, the Webull chart here, and I'm running the Robinhood trades through a small little sliver here just as my in and output, because the liquidity is there. Also, a lot of my long-term investment stocks are still in Robinhood because I don't trust their data migration processes. I've heard so many stocks get lost. So mine are still in there. Some of them, the rest of them are in TD Ameritrade. But I'm just saying, I do give them credit for what they did. They do have a lot of room for improvement, that they can kind of get to where they want to, if they choose to be that. If they want to still be the landing page for new investors, where this is not their best spot to be, they're going to be in a lot of trouble with regulators as things get wild, and they're going to do things to quote unquote protect these new investors, like stopping trading on GameStop, AMC, according to them, to protect new traders. That's going to cause a lot of backlash to them and hurt now ultimately the stock price and the company's valuation.
Definitely. We'll watch how HOOD performs next week. We gave our opinions, and that's what it's all about. I appreciate you guys giving your opinions in the chat. Let's go ahead. Let's move on to the next subject. So really, I'm going to try to touch this one a little quickly so we can get to all the subjects today. But Cathie Wood and Ark Invest going in on Robinhood. What do you have to say about this? Cathie Wood's Ark Invest Management snapped over 1.29 million shares, estimated worth at 45.18 million. Not estimated anymore.
No, it's less now, way less now. Do we know her cost per share price yet? I was checking last night. It wasn't up.
I have to check on it. I don't think it was up. I think it'll probably be up by the end of the day today.
Yeah.
But I mean,
I just hope to God they didn't buy any more. I was
God,
man, I was so
golly.
disappointed. I was so disappointed
Me too, man.
because
To tell you the truth, dude, I disown Cathie with this.
no, you can't do that.
Aunt Cathie, she's out. She's out, man.
No, you can't. No, we
She's
can't.
out for me,
I
bro.
can't do that one. There's way too many winners than this one. Look, this is what's really confusing to me is her team at ARK. Some of the most brilliant analysts I've ever seen with what they do and why they invest in companies, and they've proven themselves up until this year. It's been proven this year they're having a hard time. Credit to them. Most long-term accounts that are revolved around tech are having a hard time. But this move was one of the worst moves I've seen them ever do. And I've seen them invest in HIMS for their ARK G fund, which made no sense. And I've seen them avoid 23andMe for their ARK G fund, which made perfect sense. So there's a lot of moves that they've made that I don't agree with, but this is probably one of the worst moves that they've ever made in the history of the ARK portfolio, where I feel like maybe Jim Cramer is right when he talks about some of this stuff. Even though him and I agree on nothing, this is the one thing I have to agree with him on. This was a terrible move on Cathie Wood's part, especially just looking. I'm someone who I consider myself an idiot, right? If I looked at the fundamentals of the S1, just looked at a few things, and I said, no, this doesn't make sense. I'm going to wait. When time is ready, I'll come in and buy it. I don't know why they did it. I'm just praying they didn't pay that IPO of $38 per share. The hunch that I do have, Mitch, is maybe they invested on the private markets and now they're just revealing it in the RK portfolio now. Maybe they got it for way cheaper.
The only thing I can say is how I felt. And I think the only thing I was thinking like Ramsey right here, man. I was like, what? I can't teach you that because that's common sense. You don't buy it on day one. Oh, really? Come on. What
they did it with Coinbase too, by the way. Remember that?
Here? Guys, it's raw. It's raw. It's brand new. Give it a couple seconds. Like there was no need.
I'm actually pulling up the price right now. I'm pulling up.
You could have bought it today and be looking better than you did yesterday. I mean, just as simple as that. I personally think that people way overhype IPOs. I do not like that first week. Even when I called out Fubo, and Fubo wasn't an IPO, it came from the private like OTCs to kind of the New York Stock Exchange. Mm-hmm. What I liked about that was I didn't grab it the first week. I waited till I saw the week go by. I saw an insider buy. And it was the director. It wasn't even like anything special, but that's what pulled me over. And then I started buying.
You want some breaking news on Benzinga? You want some breaking news on Benzinga?
Let's do it.
Cathie Wood bought more HOOD today. They have 3.6 million shares now at an average price of 34.8.
I'm about to get out of here, man. That disappoints me so much. I don't even want to start.
I can't believe that
really
they
don't even want to start.
It's $126.1 million of HOOD stock. That is pure trash.
Honestly, let me just say, I guess you have to have millions to not know how to trade.
I can't say that about I can't completely disown them on that part, but this is one of the worst moves. I think something's going on behind the screens.
There's no logic. Someone fill me in because I can't find it. Let's go ahead. Let's get into the last subject of the day here. Let's get into what? Did we have some fraud action? Yes, we had some fraud action here, guys. Yesterday's criminal charges against Milton. The prosecutor used the line, where the rubber meets the road. I liked how she used that one. She stole it from him from a conference that he had. And I mean, for the road, at least for Milton, it's going to prove extremely difficult now.
He's on a downhill road, if you know what I mean.
Yeah, definitely. I mean, he was charged with 3 accounts of fraud by the U.S. Attorney's Office in Manhattan with connections to the investigation of the electric vehicle startup. The charges involved 2 counts of security fraud and 1 count of wire fraud. He pled not guilty to all 3 charges and was freed on $100 million in bonds. What did he do, guys? He just put some houses up. It must be good to have a couple million, a couple houses that are worth, one house worth 30 million, another one worth 3.
That's all the NKLA ARK pipe funds that he took with him when he left. He
Oh,
took billions
yes.
of dollars with him when he left.
I mean, he still owns some of the company. I think he owns like 20% of the company, bro.
I think he's the only reason the stock price doesn't drop. He's bag holding the hardest out of everyone else. It makes no sense that that's like what is it now? $4.7 billion company. It blows my mind how it's like QuantumScape. They have nothing, and they're just like, oh, we're gonna give you something in 2024,
Dude,
and like, okay, cool. Here's a bunch of money.
who would have known, bro? All you had to do is just push a truck down the hill, and you can make
Mitch, I'm telling you, we gotta SPAC something. We gotta SPAC something.
I don't know
you,
what it
me,
is,
we'll
bro.
get a few people on this.
I tell you, I'll throw you in the Fisher Price, bro. We'll go down the hill. Maybe we can get 4 million instead of 400.
We just need someone from the chat to make a really cool logo, and then we'll hit the ground running.
Without a doubt, without a doubt. I mean, at the end of the day, hey, this is just not right. And this is what I don't want to see in SPACs. When I first started and I started looking at NKLA, when it first made that boom, there's a reason why I didn't trade that one and I went to Workhorse. You know, was I lucky on that? Maybe I might have been lucky, but the biggest reason on that is whenever I see something just move with extreme hype and it came out of nowhere, I'm always looking for the fraud in it. Like, what is going on in here?
Yep.
There shouldn't be moves like that, and moves don't come out of nowhere, guys. So
agree.
definitely pay attention to that. Whenever you see a moment where your red flag goes up, definitely look around, because maybe that might not be a company that you want to go ahead and invest in. I feel bad because I know there's a lot of people that got caught in NKLA, and I mean, he sold it, right?
It's the tuition you pay the market at this point. It's the tuition you pay the market. I think the biggest thing that happened with NKLA was everyone was hyped because we also had DraftKings, and DraftKings was a SPAC that went to $50, $60, $70 a share. And NKLA was like, oh, and dude, that thing was getting pumped to the moon wildly. And one person during this whole process said something very interesting to me on Twitter and said, I believe NKLA was a hydro-powered car. He was like, where's the infrastructure for these cars to kind of get their hydro in fuel? I don't understand how that technology works. We kind of get filled up. It's not there. It makes complete sense. It was like, it doesn't make sense. This is weird. Something is off. And then the Hindenburg report came out, and we're all always skeptical of Hindenburg because we're like, oh, this guy's just throwing a short report together to make a bunch of money and move markets. But we were like, wow, this report really makes sense. And then he came out like, no, it's not a fraud. And then it turned out to be a fraud. And then he walked away with billions of dollars. I do feel bad for the investors of the company, but this is the thing, tuition of the market. You have to look deeper into these companies, see if it makes sense. From a valuation standpoint, just even if they weren't a fraud, it's not worth this much money, even if they were not a fraud.
Yeah, I mean, at the end of the day, this is how you can get caught in definitely companies, and a good reason in why you should diversify. Never just put your eggs in one basket. You never know who's behind that basket.
So I shouldn't go 50% into Tesla starting Monday?
Depends. If you're playing the range, 630 to 690, maybe.
I'll stick to call options for now.
There you go. There you go. I think you'll do better off with that one. Speaking of Tesla, I'll get into Tesla right now. Why don't we talk a little bit about Tesla? So really, I thought this was really bad news. I mean, the stock has kind of bounced back from it. But personally, I think this is going to really affect the stock negatively, at least going into the end of the year. Will it get to 1,000 now? I have to pull back my price target that I gave. I thought it could get to 1,000 by the end of the year if this came out. But seeing as we get delayed of what? We got a delay of the semi truck. To me, I think this was massively important. One of the things that
Trevor Milton in the driver's seat.
Who knows, man? I hope Tesla didn't push it down. But I don't think Elon would do that one. I think he hit the flamethrower at it or something like that. But definitely, this is one of the catalysts and major catalysts I thought was going to drive this company this year. And so with the pullback of being pushed into the next year, it's not that I don't believe in the company. It's just I just wanted that hype. I wanted that little push to get us through some resistance, get us up there, and then you get that catalyst to really give you that gap up look. But hey, we're getting it delayed. They also talked about the Cybertruck also being delayed a little bit. They're going to be focusing more on the Model Y production first before they focus on the Cybertruck and the semi-truck. What are you thinking about these catalysts?
This is actually good news in my opinion. I'd rather him taper the market's expectations now while we're in Q2 than when we're in Q3 and Q4. He's being honest. He's being real, saying, hey, we need to focus on the why. We're working on Giga Texas. We're working on Giga Shanghai. This is what's going on. We're going to get there. It's still happening, but we're going to get there. Versus what Elon usually does, he goes, oh, we're going to have the Roadster in 6 months, or we're going to have self-driving in 8 months. And realistically, that's not possible. So it's very smart. What they did this time is, hey, we're going to delay it, but this is our roadmap to it. We're going to focus on the Model Y, the Cybertruck, and then the Semi. So I'm very happy. One thing that a lot of people aren't catching on to is, if you look at the investor deck that they put, not the investor deck, kind of the investor presentation that they put out for Q2's results, they're very close to 1 million cars a year in that deck if Giga Shanghai produces, which I'm very skeptical of. But if Giga Shanghai produces, they could get very close to 1 million cars for this year, and that will get them to that $1,000 price target, in my opinion. If it doesn't, we'll get fairly close in the 800s. But what they did with Giga Texas, building it out so fast in 6 months, and the production that's coming out of there with the Model Y, I think it's going to be very good. I'm still very, very bullish on Tesla. I'm happy that they're taking their time. I'd rather than put out something that works rather than a semi-truck that catches on fire or blows up or something like that. So that's just my thoughts on it.
Yeah, I mean, I think what we saw also was more of them just admitting that it wasn't necessarily the vehicle's design. That I think they could put the semi-truck on the line right now. It just falls down to the chips needed. That's what it falls down to. And the chips are very limited right now. And I think this was more of a kind of worrisome to me for other companies than it was for Tesla telling me about the chips. Because if Tesla can't get chips, you can just imagine how everybody else is struggling. You know, I don't think anybody's fighting to give Elon chips, right? So, that's true. There's going to definitely be some other companies that are going to come asking, that are going to probably be like, yeah, Tesla took them all, man. I'm sorry, but they took them all. They already bought them from us. I think that's something you need to pay attention to with all the car companies, because if we can't get the chipset, then the EVs that we're all looking at, the battery plays that we're all looking at, the infrastructure plays that we're all looking at, guess what? They're going to lag because of the chip play. That's
the other thing that no one's talking about. We do have a battery shortage, believe it or not. There is a battery shortage. We're going to hit a battery wall very soon.
Material shortage, whether it be lithium, whether it be there's so many things that are hurt in our supply chain right now. And even just shipping, right? I mean, even just shipping something across the world right now is almost near impossible. You have to pay like nearly double the charge that you used to pay. And so with that, there's a lot of things that are going to be impacting this. It was a crazy week. We had a lot of things happening. Robinhood IPO, Cathie Wood went buying, and we won't get into what Mitch did.
What did you do, Mitch?
Disown. That's all I got to say.
Oh,
NKLA, fraud action, and Tesla giving a little bit of a delay, but coming back because it had a great day today. We'll see how it continues to trade next week. Like always, we'll talk about the stories right here on Money Mitch. Up next, guys, you guys are going to be having top clips of the week from Benzinga, so stay tuned for that. Ryan, any last words?
No, thank you for having me on the show. Zinger Nation, as always, thank you for coming and watching. Appreciate you all. If you'd like to follow me, you can catch me on Twitter at Ryan Rosbiani. All my other links, YouTube, everything else is at ryanstocks.com. Appreciate you for having me on, Mitch. What a beautiful week today. I really love this week a lot. It was a lot of fun.
Hey, I always love having you on. You like to give your opinion, and I appreciate that, because there's too many people out there that are not willing to give their opinion and stick to their bones. I mean, and that's why I come on this show on Friday. We do it a little bit after the market, so it's not necessarily to trade off of, but more along to just get the opinions and the stories of the week out there so that everybody can understand what is the talk out there and how we can move forward and kind of build from that and take it in our investor mindset.
Right. Definitely agree.
All right. We'll see you guys next time. Like always, guys. All right. I'm going to put in the link right here into the chat, guys, for you guys to jump into the next stream. Redirects aren't working, so I need you guys to hit this link. Get on over to the top clips. It's coming on. I'm pretty sure Spencer's starting it up right now. But like always, we'll see you, Ryan, at Tuesday at 5, right?
Yep. Tuesdays and Thursdays, 5 p.m. Eastern Standard Time, 5 to 6, and we have a lot of fun.
Always. Ryan always bringing the heat. And like always, we'll wrap it up here. Money Mitch, guys. We'll see you next week. It's time for Money Making Mitch.
When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now we all know the bull market is here to stay. Money Mitch.